Make money using gaps in the stock market. Hey guys, and welcome back to an exclusively new video on my channel Tradingfyive. And in this video we are going to discuss about the gaps in the stock market and how can we use them to take the trades and make money from the market. And let me tell you that these gaps are a very powerful concept which, if you understand properly, it can help you a lot in your trading. So if you don't want to miss a chance that can help you generate good returns in the market, make sure that you're watching this video till the end. Do not skip it. And one more thing, if you find anything valuable, anything that can add value to your trading, do not forget to like this video and subscribe the channel. Alright, and let's start with the gaps trading strategy. And on this chart you can see there is a huge difference between the price at which the market closed and on the next day when the market opened. This difference is nothing but called as gaps in the market. And these gaps in the market occurs overnight. That is when the market is closed. The movement made by the price is represented by the gaps. Now let us understand why these gaps actually occur in the market. You know, when there happens an event that influences the market, or some good news or maybe bad news for the stock, or when the foreign investors heavily buys and sell the stock in other exchanges, all of these incidents influences the price in the market. And when such influence over the stock market happens overnight, we get a gap up or gap down opening. And that is why you can see there is a huge difference between the previous day close and the next day open. Which means in this period when the market was closed, there happened some event which heavily influenced the market. And as a result of it, we get a gap. Now let me tell you that these gaps are again categorized into 4 types. The first one is the breakout gaps. These are the types of gap that happens during the breakout. The next one is the runaway gap. And this type of gap usually represent the continuation in the trend. The third one is the exhaustion gap and the fourth one is the pro gap. And in this video we are going to discuss about the breakout, runaway and exhaustion gaps. I will make a separate video for the pro gaps. Alright, and now on your screen you can see there is a chart and you can see here that the price was in a consolidation and then gives a breakout. And you can notice that there was a gap up on the breakout candle. That means the price gave a breakout after a gap. And let me tell you that whenever the price breaks a resistance or support along with a gap, it is called as the breakout gap. And one thing to remember is that the breakout that happens with a gap are usually said to be as the strong breakout. So whenever you see such a setup where the price is giving a breakout and you get a gap up opening, that is where you buy the stock. And after a breakout, when the price moves in uptrend, the gaps that the stock makes in the complete whole trend is called as runaway gap. And as you can see on the screen, that is how a runaway gaps looks like. These gaps are usually small in size and difficult to spot. And you can see there is another runaway gap over here and as well here. So just remember, the gap that happens on the breakout is called as the breakout gap. And the gaps that the market makes when it is trended is called as the runaway gap. Let's see one more example. Here the price gives a breakout. And you can see the breakout happens with a gap up. So it is called as the breakout gap. And again on this chart, when the market becomes trended, you can find many runaway gaps. But at the top you see, the market actually gave a gap up, but it was somehow not able to sustain it. That is, the market comes down after giving a gap up opening. And this is called as the exhaustion gap. It tells us that the buyers in the market are exhausted and won't be able to drive the market in uptrend. And that is why after an exhaustion gap, we may see the market taking a reversal or going into sideways range. So these are all 3 types of gaps that you have to understand. And I have shown you these gaps from bullish example. Let me show you one of the sell example. So you can see the market actually gave a breakout from the bearish side. And you can simply see there was a gap on the breakout candle and thus it is called as the breakout gap. And after that we get many of the runaway gaps on the chart. So this runaway gap will indicate that the market will continue its downtrend. So that is how you can use the gap to take a trade in the market as well as to confirm the trend. And when you find an exhaustion gap, like you can see that the market actually gave a gap down and after that filled the gap with the bullish candle. This is called as the exhaustion gap in downtrend. And over here you can simply conclude that these sellers have exhausted. The market may take a bullish reversal or go sideways. So that is how you can use this gap to take a trade in the market and make good returns out of it. But let me tell you that you have to use these gaps with some other indicator. Maybe you can use moving average or RSI for extra confirmation and to make a perfect trade. Remember that you can make good trades and make money out of it. You don't have to depend on any news or tips for trading. You can do your own analysis, your own research, and make money in the stock market. And that is what our channel Tradingfyive ensures you. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible and do not miss such many content on the stock market and technical analysis. Make sure that you subscribe to this channel and press the notification bell. Alright, and I will see you in the next video.